Two artificial intelligence companies, one trading around $5 and another trading for less than $1. At first glance, they might look like just another pair of small-cap tech stocks. But here's the catch. Both operate inside parts of the AI ecosystem that could become increasingly important as artificial intelligence moves deeper into healthcare, diagnostics, and medical data analysis. And this is where things start getting interesting. Right now, billions of dollars are flowing into artificial intelligence development, from advanced computing systems to automation platforms that help analyze enormous amounts of data. But most investors are watching the same handful of large AI companies dominating headlines. Meanwhile, an entirely different layer of the AI ecosystem is quietly developing underneath. The companies building specialized tools and infrastructure that allow AI systems to analyze complex medical data and imaging information. And sometimes, those companies remain almost invisible to the broader market. So the real question becomes this: if AI continues expanding into healthcare the way analysts expect, could smaller companies operating inside these niche technology layers eventually become far more important? Because the two companies we're looking at today sit directly inside that conversation. When people talk about artificial intelligence, the discussion usually centers around obvious areas: massive AI chips, large cloud computing platforms, or the biggest software companies building AI models. But artificial intelligence doesn't operate in isolation. It relies on entire layers of infrastructure, systems that collect, organize, and analyze enormous amounts of information. And healthcare is one of the areas where this transformation is becoming especially important. Hospitals generate huge volumes of medical images and patient data every day. Analyzing that information efficiently requires advanced technology. Now here's where things become interesting from an investment perspective. This is exactly where pricing inefficiencies often appear. Large institutional investors frequently watch these infrastructure layers closely because they understand something many retail investors overlook. Sometimes the most important technological shifts happen quietly, before the broader market fully notices. Now, this doesn't guarantee anything, but historically, this is exactly where smaller cap opportunities tend to form. The first company operates in an area that could become increasingly relevant as artificial intelligence expands inside healthcare systems: medical imaging. Think about how doctors diagnose diseases today. They rely heavily on scans, ultrasound, MRI, CT imaging to analyze what's happening inside the body. But interpreting these images quickly and accurately can be incredibly complex. And this is where technology begins to play a bigger role. AI systems are becoming capable of analyzing medical images and identifying patterns that may help doctors detect certain conditions earlier. But here's the catch. Those AI systems require specialized imaging technologies capable of producing extremely precise data. And that's exactly the type of problem this company is trying to solve. Now, before we reveal the name, there's another interesting twist. The second company we'll talk about operates in a completely different layer of healthcare AI, focusing on massive medical data networks, which creates a fascinating contrast between the two. Artificial intelligence is increasingly being integrated into healthcare diagnostics. Researchers are developing AI systems capable of analyzing imaging scans, detecting abnormalities, and assisting physicians with decision-making. And if this technology continues advancing, imaging systems capable of producing more detailed medical data could become even more valuable, because AI systems depend heavily on high-quality input data. If this layer expands, companies developing advanced imaging technologies naturally become more relevant. The stock itself has experienced interesting movement over time. At different points, excitement around medical technology and AI diagnostics pushed the price significantly higher. Since then, the stock pulled back and stabilized in the mid-single-digit range. Now the question becomes, is this simply volatility inside a small healthcare technology company, or a business working inside a technological shift that the market hasn't fully priced in yet? The company focuses on developing imaging technology designed to enhance traditional ultrasound systems. The goal is to provide more detailed measurements that could help physicians evaluate certain medical conditions with greater precision. And when you actually look at the company behind this technology, it turns out to be Endra Life Sciences Inc., ticker symbol NDRA, currently trading around $5.11 per share. Now, of course, this doesn't mean the stock moves tomorrow. Healthcare technology companies often face regulatory hurdles, research timelines, and commercialization challenges. There are real risks here, but sometimes the market simply hasn't fully connected emerging AI diagnostics trends with smaller companies operating inside that infrastructure layer, and timing is always the key factor. Now, before we move to the second stock, here's something most people completely overlook. Even though AI demand is exploding globally, some companies operating in specialized technology layers often experience delayed attention from the broader market, because investors tend to focus on the biggest names first, and historically, when that attention eventually expands, smaller companies sometimes move far more aggressively. Which brings us to the second company. But unlike the first company, which focuses on medical imaging technology, this next company operates in a completely different layer of healthcare AI, data. Where the first company focuses on collecting detailed medical information through imaging, this one focuses on organizing and distributing massive medical data sets. And this is where things start getting really interesting. Healthcare systems generate enormous amounts of medical data every day. Patient records, diagnostic images, clinical research information. For artificial intelligence systems to work effectively in healthcare, they require large, well-structured datasets to train on. And companies building networks that connect and distribute medical imaging data could play a role in enabling that process. If artificial intelligence continues expanding inside healthcare, the demand for high-quality medical datasets will likely grow as well, because AI systems improve as they analyze larger volumes of information, and organizations capable of providing structured medical data could become increasingly important to researchers and healthcare providers. The stock itself has traded at different price levels over time as the company continued developing its platform. At various points, investor attention pushed the stock significantly higher. Since then, it pulled back and now trades below the $1 level. Which raises another interesting question. Is the market overlooking a niche healthcare data platform, or simply waiting for stronger adoption signals? And this is where it gets interesting, because the company behind this platform is OneMedNet Corp. Ticker, symbol ONMD. Currently trading around 0.87 per share. Again, this doesn't guarantee anything. Small companies building data platforms face competition and scaling challenges. But sometimes niche technology layers remain under the radar until the broader industry begins adopting them more aggressively. Now, the interesting comparison begins. One company focuses on medical imaging technology capable of producing advanced diagnostic data. The other focuses on medical data infrastructure capable of organizing and distributing that information. One represents how healthcare data is created, the other represents how healthcare data is organized and analyzed, and both exist inside layers of the healthcare AI ecosystem that don't always receive the same attention as major technology companies, which raises a fascinating thought experiment. If AI diagnostics become a major healthcare trend, which company benefits faster? But if the biggest expansion happens in AI-driven medical data analysis, could the data network company see stronger demand? There's no simple answer. And that tension is exactly what makes these smaller technology companies interesting to analyze. Artificial intelligence isn't just one industry, it's an entire technological stack. From imaging systems that generate data, to networks that distribute that data, to AI models that analyze it. And historically, some of the most powerful market movements occur when investors begin recognizing these secondary infrastructure layers. Because once attention shifts toward those parts of the ecosystem, pricing can sometimes adjust very quickly. If you enjoy exploring smaller companies connected to emerging technology trends, consider subscribing for more research-focused breakdowns like this. And as always, this discussion is for educational purposes only, not financial advice.